Donald Trump has been elected US president with potentially huge domestic US and global economic effects. With me to discuss this is Martin Wolf, the FT's chief economics commentator. Martin, one of the things Donald Trump has said he wants to do is have a huge infrastructure program and big tax cuts. This is exactly the fiscal activism you've always been asking for.
Well, let's separate up the two elements. It is plausible that, unlike his predecessor, with a Republican Congress who will want to support him, that he will be able to get infrastructure spending going. I think that'll be very desirable in the US. Borrowing is extremely cheap, and it will, with luck, it will remain so. Depends on other things.
Can they do that borrowing? Because there's the Republican Congress don't like.
Well, this is the issue.
There are debt limits. Can even Donald Trump get it through?
This is a big issue, but it would be desirable to do more infrastructure spending. Whether it is still very desirable enormously to increase the fiscal deficit is a slightly bigger question, because this is a big debate, but it looks as though the US is moderately close to full employment. So it's the composition of spending which is most important. And I think there's a very big case for raising infrastructure spending. But of course, historically, Congress has opposed that. What he does propose, which congressional Republicans will like very much, is big permanent cuts in tax. I strongly object to permanent cuts in tax, first because they're enormously regressive. They will benefit the richest. But more important, it's not clear that in the long run, the fiscal position of the US is sustainable at the levels of tax they were proposing. So that is a very big real risk. And finally, if Congress does agree to the tax cuts, they will want tax spending cuts, and if infrastructure spending is going to rise, they're going to want the cuts to fall on current spending or entitlements, and that could be very difficult.
Okay, so those are distribution arguments, but when we're looking at the economy, we are thinking that maybe he's going to add stimulus. We should be expecting higher interest rates. Do we get that in December straight away from the Fed, or maybe later?
Well, that's, I think, the really big question, or a really big question, is the monetary policy consequences. I would have thought that the Fed shouldn't change its mind about monetary policy in the light of what the fiscal authorities might do under a new administration, because they don't know. Maybe there will be no net fiscal stimulus because they'll cut spending pari passu. So the Fed will do whatever it's going to do. I've tended to assume there was a reasonable chance there will be a rate hike in December. I think now, given what's happening in the markets, that chance hasn't changed. I tend to think it's sort of 50-50, so we'll get a small hike. The longer term implications for monetary policy are really interesting. Now, let's suppose they really do go ahead with a huge fiscal stimulus, both huge tax cuts and infrastructure spending. Assume that, so what will the monetary authorities do? Well, in the normal case, they would raise rates of interest, short rates, because the economy will be beginning to overheat. Wages will probably begin to rise, and long rates will continue to will rise anyway. So the yield curve will steepen, but they will also raise short rates. Now,
that's good news, though.
Well, the question is, will Mr. Trump accept it? Because Mr. Trump has...
But he wants higher
interest rates. Well, that's not clear. Mr. Trump has said he wants 4% growth. And I think that's very important, because what I think that means is that for the Fed chairman, the new one, who will probably replace Janet in 2018, possibly earlier if he can push her out, but say 2018, that will sort of be judged, well, are you choking off the economy before it gets to 4% growth? If he feels under a real pressure to get that sort of growth, I think you could have a repeat of the sort of Nixon-Burns position in the early 70s and wildly irresponsible monetary policy. Okay, and that's a real tail risk.
Let's leave the US, because clearly the US, as the world's most important economy, has wider implications. And the main sort of international economic policy Donald Trump has espoused has really been to overthrow the whole of the post-war liberal global economic consensus of free trade and managed through trade agreements, and relatively open immigration, but under some sort of control. Is this actually very damaging? And we have to be brief here because we're coming to the end. Is this potentially very damaging for the global economy?
I think if he does what he's threatened to do, particularly imposing massive tariffs on China, then it could be very, very damaging, because it would mark the end of the WTO, the World Trade Organization, as a credible system, and it could therefore when globalization is already very fragile and under pressure and trade is growing slowly, it could sort of mark the end of this era of globalization. So there are very real risks associated with his trade policies, particularly in relationship to China.
And if the US did really sort of complain very loudly or even withdraw from the WTO, does that mean we get into global trade war? Is that really, in the economics of it, what the big threat is?
In the near term, that is the big danger, that if the US were to impose these enormous tariffs, he suggested that there will be retaliation, and that's what a trade war means. Tit for tat, increases in tariffs and other trade barriers, but that would then have a dramatic effect on investment and foreign direct investment. The whole system would begin to close down, and we would have a reversal back to sort of the worst picture of the 1930s.